This is the French Workbench podcast, and I'm in studio here. I got a CPA with me today, and his name is Rick Douglas, and he's somebody we want to talk to because there's been a lot of changes going on with really people filing their tax returns, also what's going on with lending. So I want to talk to him about this. Rick, what's going on, buddy?
Hey, how you doing, guys? Thanks for having me on here.
Good, man. So what I want to know is what... first off, how did you get started in being a CPA? How long you been doing it? Talk about your company a little bit.
Yeah, and
talk about what you're doing as far as with the whole adjustments that's happening here with the... let's start with this. Let's start with you. Okay. What about you?
All right. Well, I'm born and raised here in Vegas, so I love this town, man. This town's been great to me. I went to college at UNLV. I actually, believe it or not, I was there. People seem to make fun of me, but I used to wear a Speedo and ding ding, dive off of a diving board.
Not for European, then it's cool.
No. Hey, but you have great tan lines, let me tell you. Right? So I went there. I had a diving scholarship, but then I decided I didn't really know what I wanted to do. Honestly, I just took a hiatus from college. I went on a 2-year mission for church and to Korea. So you had John Kim on last time, and I'm like, he's going back to my roots there in Korea.
Yeah.
But,
how long were you there for? A couple years?
I was there for 2 years.
Okay.
Yeah. And, learn how to speak Korean. That's great. Come back here. I wanted to use it, but I was like, I didn't know what I wanted to do.
Sure.
Honestly, if I could have just played sports, I wasn't good enough to be professional at anything, but I was like, just go play sports and make money. That'd be great. But obviously that's not an option. So I thought about it for a while, and after about 4 years, I decided to, it's time to go back to school. So I went back to school, and I kind of interviewed some people, figuring out what I wanted to do, because I wanted something that was going to be good in good times and bad times.
Yeah.
So people need accountants in good times and bad times, and everybody needs to file a tax return regardless.
So I know a lot of people, first off, you know Chuck Norris, huh? Is that right? Brett,
let's get this elephant out of the room.
You've been waiting for that, Brett.
Dude,
I know you.
I'm just sitting here like, oh, that's great. Great. School. Oh, okay. Yeah,
School.
2 years.
This is boring.
That's awesome.
Right.
So, how's Chuck Norris?
Can we get to Chuck Norris? So,
let's just get to that because
how's Chuck Norris?
So you know Chuck Norris, like you said, your dad trained with him. Is that right?
Yeah. No, so I was, as a kid, I was lucky, man. I was blessed to have a great childhood. My dad...
Did you grow up here?
I grew up here.
Oh, yeah.
Yeah, and so my dad actually had a studio in the backyard teaching karate.
Wow. Okay.
But when he got out of the military, and he's like, man, I want to learn martial arts. And so I got to find somebody. He went up and down the coast in California.
Yeah.
And he rested on Chuck. And he just liked his style.
So you guys are from California?
No.
So let me ask you this: was Chuck Norris Chuck Norris back then?
He was a world champion in the point fighting.
But as far as outside of that world,
he was not a movie star. No.
How is your dad able to get him to train with him since he's a newbie and Chuck Norris is like a world champion?
Right. Well,
that's moving right up, man.
My dad's a smooth talker. What are you talking about?
Apparently.
No, he was over there, and Chuck had a studio, so he had students.
Okay.
So he walked in his studio.
This is
and
in
just
Cali?
started talking to him. This is in California.
Okay.
And then he says, I want to be trained, but I live in Las Vegas. So what he did is he actually would fly him out and do private lessons. So that's how passionate my dad was about martial arts.
Wow.
Did you ever get to meet Bruce Lee?
I never did get to meet Bruce Lee.
No, huh?
No.
Did your dad?
Yeah. That's a great question. I don't even know. I'd ask him, but he's not
you
with
ever
us
see those?
anymore.
You ever see those?
Be like water. Dude, I'm telling you, that's like the ultimate. You watch that YouTube, and like, you're like, dude, that guy.
Dude, well, let me
see
say
him
this.
in ping pong with the.
No, so I was watching some on YouTube, and what they were saying on YouTube was that he trained himself. I mean, obviously we know what happened, but he put himself where he got sick because he trained so hard.
Yeah.
And Bruce Lee.
Wow.
And I didn't know, like, obviously you can overtrain, but I didn't know that it was going to be a point where there was a person that tried to follow what his regiment was. And I didn't know, like, as far as like all the problems that he had was contributed to the fact that he used to just overtrain. He used to train like 6-8 hours a day or something like that.
Yeah.
Something crazy. I think it was more than that. I think it was crazy. So,
and hardcore training too, not just
So I think with Chuck Norris, I mean, we all know Chuck's. How far up did Chuck get as far as belts and things?
He was 10th degree.
He was 10th degree.
I think
10th degree?
Wow.
That's pretty big.
So
man.
is he from California, Chuck Norris?
Actually, I don't believe he is.
That's just where he settled after
that's where he
doing
settled.
everything.
Yeah. Mm-hmm. And he has a brother that's a martial artist. His other brother was killed in Vietnam, so that's why you see all of his movies, and not all of them, but he has the ones that are missing in action.
Yeah.
You know, and kind of those war ones. It's based off of his brother. Yeah. So
you're a CPA, and I think a lot of people want to know what is this all about with the whole, change with. Now we're filing tax returns. I think it's like February 12th.
February 12th, yeah, on personal returns.
And personal returns. And so what I deal with, and I know Brett is a part of this too, but what I deal with a lot is people that are looking for how to get approved where they're self-employed. And we've had a lot of changes going on with self-employed with buyers. Last year, because of COVID, there was a lot of drop-off. A lot of people were not making the same money. They were having issues as far as keeping consistency. And unfortunately, we had about 70% of the people last year that was self-employed didn't get qualified for a loan. You got to go through a bunch of stuff. I mean, it's like you got to go through some type of algorithm and calculation sheet.
And the thing about that is we're Las Vegas, where you have a city or a state and a city that has a lot of entertainment. A lot of people who don't necessarily get paid a regular paycheck.
Yeah.
A servicing industry town, I guess.
Yeah.
So to even have that in this town, because I've met some pretty creative lenders and pretty creative programs here in Las Vegas, and I'm sure there are places, but if they're going to have them, what I'm saying is they'll have them in this town available.
2020, you had to get a profit and loss. If you can afford it, you do an audited profit and loss that produces a lot better results. Mm-hmm. Underwriting probably looks at that a little bit more cleaner than just doing it yourself. And then if you didn't get an audited profit and loss, you didn't want to pay the money, you had to do it yourself, and then you also had to get business bank statements to match that everything up as far as what the deposits are. So why is that important for everybody? It's important because a lot of people don't understand that banks are going to probably make this a mainstay where you have to provide a year-to-date profit and loss. Also, you have to provide business, bank statements to show the deposits. So there's a lot of things that we have to look at. And so what are you dealing with as far as, are you dealing with clients that in the past where they were coming to you for audited profit and loss and profit and losses to get approved for these loans?
It's almost like right now when we're going through the PPP, second round PPP loan stuff, where they're actually saying, hey, we need to see copies of your bank statements to prove your revenue.
Right.
They're going to do that. That's what they're doing now as far as the loans are concerned.
Well, and I think if you go out and you're trying to get pre-approved, obviously I'm going to direct them to you. Mm-hmm. And I just talked to somebody today about it. It's that if you get an audited profit and loss, they're saying, well, why would I pay the money to do that? There's a lot of people that come to you for not just getting a profit and loss, but also trying to get maybe just direction on how to file their returns properly, maybe save some money. So do you see a lot of people really elect to still do it like the easy way where they're just they're not paying for it, basically?
Well, when you say paying for it, you're paying for
like the services, right? A lot of people just want to take the easy route.
They do.
Where if I were to say, hey, you know what? If you're a business owner, you're somebody out there that wants to save money, all you have to do is go talk to a CPA, and maybe they just get an idea. I mean, it's a consultation, right?
Yeah.
I'm sure that everybody's got to make money, but you can end up saving a lot of money.
Yeah.
And so I'm just curious, like, what is your percentage of people that because a lot of people that come to you are like business owners, people with money, but there's not a lot of people that I see anyways that are interested if they don't make a ton of money.
Right.
So does it make sense?
Yeah, you know what? And that's a great question because in my space, I actually love this niche. I take the smallest of smallest. I mean, if you're just starting a business, I don't care what it is. I love to do that work because there's so much you can actually save even by doing that, to where my goal is, at the minimum, is to save people the tax dollars that I come up with for the deductions, to show them legitimately how to take advantage of the deductions. Then I'm like, okay, job done.
Right.
So that, because people are afraid. They're afraid to come to a CPA. It's like, man, that's expensive, and I don't know what I'm going to get. And so I always provide a free consultation because I'm like, I want you to see who I am and see what we're going to do. And we're going to talk about some stuff, and that makes sense. And if you trust me, then let's go through it. Luckily, knock on wood, I've been blessed. I've had a lot of people that have just said, yeah, absolutely, let's go through it. I mean, majority of the people, probably 95% of the people that I meet with are going to have me do their work. And I do it because I truly love what I do. I'm passionate about it.
Yeah. So I think what we're trying to provide to people is help with how to get started with being, going to somebody and talking to somebody about should I do it or should I not. Yeah. There's a lot of changes going on with me as far as just getting self-employed buyers out there, getting them approved. Mm-hmm. And so they always write off a lot of income, right? Or if they have properties, they remove a lot of that income, right? So how many people come into you and say, hey, I want to write everything off?
Yeah, unless you're buying a house, everybody, right?
It's all about saving taxes,
right? It is. It's about saving taxes. But you know what? Then we have to look. It's just like this. When we plan with people, whether you've owned a business for a long time or not, we look at, hey, what is your end goal? What are you trying to get to?
Yeah.
If it's to save taxes, great. Let's go for it, man.
Yeah.
But if you got to buy a house, when we're doing returns, we got to find out what they're trying to go for. For the most part, it's saving the tax dollars. But if you're going to buy a house, and I get a lot of people, honestly, you get some people, this is the entertainment industry, so they don't necessarily have all the proper documentation or whatever the case may be, but they're like, hey, I get people the strippers that come in, and they're like, hey, well, listen, let's just claim what you have. Let's go for it here. You're trying to buy a house. Well, claim it. You're going to pay the tax on it. But if you want to buy a house, you have to do this. So I say, hey, go talk to your lender. Go see what your lender needs you to have to qualify.
Yeah, and I think, too, it's like they come to me and it's like, well, I want to get approved. Like, for instance, you always have to take an average for the most part. And when you come and it's like you look at the average income.
So basically, if they come to you, say, I have a CPA, and they hand whatever it is, and you're in direct contact, it makes it a lot easier on your side, correct?
It does. It makes it a lot easier because, let me say this. If you know that you're going to buy a house and you go and you get a CPA, let's say you make $50,000. If somebody makes $50,000 a year, that's the household income. Does it make sense to get a CPA?
This is the CPA answer. It depends.
Okay. On what?
So it depends on what your goal. I mean, if you're trying to buy a house and $50,000 is the household income, and you have to have $50,000 and it's a W-2. I mean, if you own your own business, it does, and I'll tell you why. Because you could do it as a sole proprietorship, or you could do it as an S corp, still have $50,000, but I can guarantee you're going to pay about $5,000 less in tax.
Explain the difference between, because we're going to go back onto that. Explain the difference between an S corp, a Schedule C. What is the real purposes? I mean, in a nutshell, can you explain why somebody would do that?
Okay, so it's funny because it just so happens that last night I have a client that I picked up last year, and we formed an LLC for him. He was an electrical contractor. Net's about $70,000. I think this year he'll net $60,000.
Okay,
right? So it's not a big net, but he's an S corp, or he's still a contractor, sole proprietorship.
Okay,
so he calls me in a panic last night. And he's like, man, I've got to be a single member LLC for tax purposes. I got to be a single member. I can't be a C corp. I can't be an S corp. I'm like, why? I said, we already filed the S election, which is, essentially, let me go a little history on that. You got sole proprietorship, which is typically the easiest route. You don't have to do a whole lot. You just maybe start making money. You deduct your expenses. Okay. And an S corporation is typically an LLC that you form, and then you have to make an election with the IRS. So that you can be taxed as an S corp and take advantage of those tax benefits. But when you're an S corporation, you have to, if you're going to take money out of that company and take distributions, you have to do a payroll. If you don't, it's going to red flag the IRS. So we're
rewind that.
Okay,
could you? So an S corp, LLC.
Okay, so here, this is a great question because people get tripped up on this.
Okay,
so there's two types of entities. There's an LLC. And there's Inc., a corporation. Okay.
Yes.
So the most flexible one is an LLC.
Okay.
And
why?
Because you can do multiple things with that. It can be a sole proprietorship. It can be an S corp. It can be a partnership. It actually can be a C corporation. Okay.
So you can do some of those other things later on with it?
You could if you wanted to.
Okay.
You are limited once you make some
flexibility
moves.
of it.
Yeah, it does. In the very beginning. So what I'll do, hey, listen, maybe we start the LLC and we don't know if we need to do an S corporation because maybe you're just starting out and you just want the liability protection and you don't want to, it doesn't make sense to be an S corporation. Okay, fine. Let's do a sole proprietorship filing. You still file on Schedule C just like you would a sole proprietorship with no LLC. Okay. Now you have the LLC. We get there and we're like, okay, yeah, let's make it an S corporation. We can actually file that election after the year is over.
Okay.
And do a late filing and make you an S corp. Now the flip side is we haven't done salary, so we have to allocate a salary, and there's a process to that, and I can go into that. That's kind of boring, but bottom line is that's what you want to do. You have an LLC that can be an S corporation. You have an LLC that can be a C corporation, but there's whatever. No, people don't do C corporations typically. There's not a tax benefit to it.
Okay.
So you have sole prop. Let's say you're making 50 grand, like you said there. You take that 50 grand and multiply that by 15.3%. Okay, so you're going to wind up with roughly $6,000 in Social Security and Medicare tax that you pay on 50 grand as a sole prop. So that's just Social Security and Medicare. Not income tax. Okay, $6 grand. So let's say you formed an LLC and you're like, hey, let's make it an S corp. Great, here you go, and you made 60 grand. Now what I would do is say, let's take a reasonable salary. What's reasonable? Let's look it up. I don't know, whatever. 20 grand, let's say, is a reasonable salary.
Okay.
Social Security and Medicare tax on 20 grand of 50, which is 15.3%.
Would you suggest going the route of giving yourself a salary?
Absolutely. And if you don't, then the IRS will audit you eventually. Like, you can't have that, take money out and not do a payroll or not do payroll for yourself.
So if it's in a business account, you just can't randomly take money out and not have a reason for it or an expense that it goes to.
Well, you actually can take distribution. So I'll get to that too. So the point is that IRS is saying, hey, we don't want you to abuse this. It's almost like, give us a little. Yeah. You don't need to give us all of it. Right. Okay. So if you have 50 grand, forgive me, I actually did the math wrong on that. The 50 grand times 15.3% is, I get my finger to the walk, and I think it's $7,500 is what it really is. Sorry. But if you have, then you have a salary. Okay, so we have an S corporation.
Okay.
And we're doing a salary, W-2. We're doing it the right way. Okay. Right. And 15.3% is $3 grand. So you could pay $7,500 as a sole proprietorship at 50 grand.
Okay.
Or you do $3,000 as an S corporation. So you can see the savings there.
Gotcha.
Right?
Yeah.
Okay. So that's basically what I do all day long is do that. So I had this guy come in. He's like, man, I got to be a single member LLC. And we're talking. He's like, this old CPA my wife had for 30 years. And he's saying, no, you shouldn't do that. And I'm like, why?
Yeah.
I said, what are you talking? I literally, I was like so frustrated. And I finally got to the reason. And he said something in my mind in what he was saying. And he said his wife. And I went, okay. So let me ask you this.
I hear that on my end too all the time. People
did your wife say that you have to do this? And he goes, and he paused, and I was like, well, kinda.
Kinda.
So now we know. And he goes, I don't care how much it costs me. My wife, we have to do it this way. I'm like, okay, then we will do it that way. You will pay more in tax.
Yeah.
You will actually expose yourself to a higher risk of being audited.
Sign here saying I told you otherwise.
Yeah, I know.
People like, oh, you don't want a home inspection? Cool. Sign here saying you don't want Sign coming back at me, man.
So we're going through the process of actually revoking his S election so that he can pay more in tax. That's literally the only thing that's going to happen. I'm like, okay, fine. Be that way.
Hey, man, you know how people are. You're not going to tell them, you know. Yeah. And the war you would rage at home, it's just easier.
It's not worth it.
Not over that small amount of money. Nope.
What do you think's going to happen though? So you're going to go down. We're going to have people filing on the 12th.
Yeah,
and that's the new thing. So, what are your thoughts as far as getting people where they get? How long does it usually take for somebody where they file returns and the actual IRS registers that?
Yeah, we get notification within a few days that they actually did accept the return. It's just their refund typically takes, they say, anywhere from 2 to 6 weeks, and I see it all over the board, man. Yeah. I see a week and a half. Yeah. But I see where sometimes if you have a really big refund, they're like, it could be fraud. So we're going to hang on to this for a while. And I've had them hang on to it for almost a year.
Brett, you're a 1099 as a realtor, is that right?
Yeah.
Yeah.
So you file as a Schedule C?
Yeah.
Okay. Then
we need to talk, Brett.
See, as a lender, I'm a W-2 employee, right? So you can write off some things, but most of the things you can't.
Yeah.
Right.
So now the new laws with you guys, unfortunately, and I feel bad because you guys got nailed in the new tax laws. There's a few things that I disagree with, but there's a lot of things I actually really agree with.
The corporations, like the big corporations that run loan options or loan, guarantee rate and all these, they're the ones that really get to write that stuff off because they're corporations.
Bingo.
As far as being myself, where I'm a W-2 employee of guarantee rate or a lot of these lending companies,
they're basically because lender, you're given a salary?
No. So I'm a W-2 employee.
Not necessarily a salary. He probably makes it off of commissions.
I make it off of commissions.
Yeah, but it's still W-2.
You're strictly commissions only.
Strictly commissions only.
Wow, that's crazy because that's the difference between realtor and you.
Yeah, there's no difference.
Exactly.
Yeah. Like they can fire you.
Yeah.
You can't fire me. I'm an independent contractor.
Yeah, exactly.
Well, the thing is too, is
I quit.
If I go to you and talk to you and say, hey, I want to write some income off, right? Type of thing. There's only so much you can do based upon if you went in there as a Schedule C or somebody that's a 1099 that turned. You're a Schedule C though, I'm assuming, right? So there's only so much you can do. So I think the difference is people don't understand why. Like they go in and they write off income and they write off their tax returns as far as their income showing. Sometimes they have properties that are used for business. So they have I have maybe a house or a couple houses or some type of building, and then they put it into their tax returns, and then they write the income off, and they're like, well, how am I going to get another house, or how am I going to get a loan? So I think a lot of people don't understand the process of that. They need to have the right information, the right questions, I guess.
A CPA is your friend if you're investing.
A good CPA is your friend.
Well, correct. A good one, yeah. Don't give me,
Look, and that's where.
No, you're right.
I mean, seriously, because there's some really good things you can do, and there's actually multiple ways. Like you just brought up the home. There's multiple ways you can actually write off your home and get a bigger deduction a certain way. And there's some things that you may not want to do because then you might have to go back and recapture the depreciation you've already done when you go to sell the house. So we have to be very careful in how we do that.
So can you kind of take the mind of a client out there that's looking and saying, maybe I'm a business owner. I just started. This is my first year filing. Or maybe some people out there that do file, they just come to their CPA and they're like, just save me as much money. But they really don't know how it all flows. Now, you got different schedules, but it all flows to the 1040 or the beginning, you want to call it, the beginning. So as you're breaking that down, people always say, well, where does it all come from, right? So can you kind of explain the different schedules and like how it kind of flows in a very concise.
So and here's the thing, like especially like for a lender like you're going to look at the 1040. I mean, obviously, if they own a business and they own 20% more, they're going to have to look at K1s and may potentially even the full tax return.
Right.
Ultimately, unless you're a C corp, which doesn't make any sense to do, typically for small businesses, everything flows through and comes to the 1040. So if you look at the 1040, there's going to be another income section, and that usually combines your your Schedule C income, which is going to be a typical sole proprietorship like you, Brett, like a 1099, who doesn't have an S corporation. That also includes then those people who get K1s from an S corporation that come through and flow through, and that's where sometimes lenders get tripped up because of the S corporation. Because you include the W-2 income plus the flow-through income from your S corporation.
Yeah,
it all gets on there. So people are afraid, like, no, I need to do a big W-2. I'm trying to qualify for a house. And I'm like, no, you don't. Actually, they will take it all into consideration. They're going to take your W-2 plus the flow-through in order to get your income that that they're going to calculate for your loan to get a loan. So it all comes through onto that Schedule 1 of your 1040. And if you have a partnership, same thing. K1 comes through and it gets recorded there. We can go into the different tax stuff another time, and that's probably
it's just getting an insight of how it kind of works. And then when it comes to me, it's like, okay, well, I'm going to look at the 1040. I'm going to look at your adjusted gross income. I'm going to look at if you did write things off, can you add back depreciation, depreciation, all of these things. So it's important because I think people don't understand. And when you go file your returns, one of the things I wanted to discuss, and the reason why I brought you here is it's starting, right?
Yeah.
You got February 12th. It's going to start. A lot of people don't understand that with being a self-employed buyer, how does that affect me?
Yeah.
And we've changed these laws because now you got to prove that income. Now, if you file, let's say you file your tax returns in February, on the very first date, February 12th, you have to actually now go back 3 months of showing a year to date. Like, you have to prove that the income's not dropped off. So everybody's like, well, how do you do that? Well, you got to get a profit and loss.
You got to be under profit and loss.
Year-to-date profit and loss, or you got to get the last 3 months. And as you keep filing, what lenders are going to start asking for is if you do it yourself, the last 3 months or the prior 3 months, right? Including when you filed.
Yeah.
And then also your business bank statements. And I told somebody today the best thing to do is get an audited profit and loss. What is the process for an audited profit and loss?
So if you're going to do an audited one, honestly, that is the word audit means like there are some major procedures, and we're talking probably $7,500 to $10,000 to audit because this is I know because there's the rules for us as CPAs are so high, and we have to go through all these checklists. We have to
so what is the cost?
$7,500 to
so that's
$10,000.
you like a CPA that's doing the audit.
Yeah.
You're doing the audit.
Yeah. So and honestly, we have a whole department that does audits because that's not something you want to do.
But you know what? Listen, we have a lot of people that come in and they don't have tons of money, but they got money.
Mm-hmm. If you got a couple million, you should definitely.
Well, I wouldn't even think that. If you got somebody out there and you got a couple $100,000 and you want to buy a house, you're moving from another state, you want to come here and buy a home, and you're saying, you know what? I can do this myself and I can go through all of the problems that could happen through an underwriter, or I can just go to a CPA and get an audited profit and loss. And guess what? When it goes through, I mean, it's like forensic files. You know what I mean?
So
you guys
it makes it 10 times easier on your end, even from the get-go.
For everybody's
working.
For everybody's in. So it's like this. You pay for what you get. Now, if you don't have the money, you're coming in, you got $50,000, and you're like, hey, I don't got 75. I get it. I mean, I understand that. But look, if you're going into it and you want to buy a house, especially in today's world, and with self-employed buyers and how they're scrutinized.
If you're selling your house in Cali, you're making money. So
that's what I'm saying. Well, it's not just Cali anywhere. So I think it's like important to understand that if you have the money to do it and you want less, it's the least path of resistance.
By far, like if we provide you an audited profit and loss, which is really just going to be like of your company.
Yeah.
I mean, there's not really much else they can do. It's like, oh, this is great.
Yeah. What's an underwriter going to objection to that?
You know?
There's not going to be an objection,
right? Yeah. So I mean, I'd hate to. I try to not have the client incur costs as much as possible, but we can help them. Honestly, we can do the full bookkeeping for them for far less than what an audit would cost for 2 years.
So
and have it so that they're ready to go. We have bank statements.
Say you have a client, you get them set up, taking care of them, filing, doing all the thing with their taxes. 3 years go by, where they come back to you every year. They're making some good money. IRS steps in and says, we want to audit this person. Does it even get to that point when they're working with the CPA like you already? Or is it something where you already have like filed up, you just send to them, or they send their own people in? How does that work?
Yeah, so what's going to happen, if we're doing the bookkeeping, which is great, because I love our bookkeepers. I'm actually married to one of them.
You love her so much you married her.
That's right.
That's funny.
That was a little sketchy.
You can trust your bookkeeper, right?
No, so if we're doing the bookkeeping, it's great because every month we give you a packet that has your balance sheet, your profit and loss. It has a list of the different types of expenses that happen that month and all your bank statements, credit card statements. So you get literally an audit-ready packet every month. So if the IRS comes in, we're like, here you go. It's already done, man.
Yeah.
Here, just go for it. Everything's reconciled.
How long does it take them to be like, oh, okay, cool?
If they see that, because one of the requirements is that you keep good records. And if they see good records, they're like, oh, okay.
It's not worth their time to try to invest.
Just like anything in life, though, if you're
we
organized,
can't really find too much. We know we're not going to find anything in here, so I got you.
The key things they're going to look at.
Someone lawyering up right away.
Here's what they're going to look at. They're going to look at like vehicles, like whether it's mileage, because most people will do mileage, or if you purchased a vehicle, the percentage use of that. They're going to look at your meals. It used to be entertainment. Unfortunately, that's not the case.
They took that away. The entertainment.
They took entertainment away. That's a bummer because there's actually a lot of business that happens in entertainment.
Heck yeah, dude! Just on the golf course alone.
And it kind of goes against what they say because a necessary expense is ordinary and necessary.
Yeah.
Well, absolutely. Entertainment is ordinary and necessary.
Yeah, you want to land that client. They don't want to be in across.
So it's a contradiction in their laws, if you ask me. But at least now meals are 100%, so that's good. Yeah. Starting this year.
So that's when can you write that off? Like if you're looking at that and people don't know what you're talking about, like when can you wite that off?
Like your meals or
meals and entertainment or not entertainment, but meals and let's say your mileage. When is give me an example of somebody out there that's like what they do for a living. How can they write that stuff off?
So a lot of times, especially with for you as a real estate agent, you're gonna go to lunch and you're just gonna ask somebody that maybe a potential client. Maybe it's a friend of yours that refers people. And you're going to say, hey, let's just go to lunch, man. Let's go to Cafe Rio. Yeah. Great. Hey, I'll pay for it. Cool. You pay for the lunch. That's it right there. Real easy. And the key is it's like the who, what, where, when, why when you get that when you buy somebody lunch or dinner or whatever the case may be. You want to put who you went with, what you talked about. It says where on there and how much you bought. And
on the receipt.
No, it's going to say Cafe Rio and how much, but you're going to.
Can I just hand you
literally just
hand you my bank statement every month and say, dude, look at Cafe Rio.
Let's just say how we do it. We get it.
Every time you see me eating, I was with someone.
Your receipts are your business. I don't want your receipts. Let me just tell you right now. Who knows where they've been? What pockets? That little pouch on the side there. That you put it in the car door.
So how do you go about it then if you don't have the receipts?
No. You got to think about it. your credit card or your bank statement, it acts like a receipt.
Yeah, that's what.
So
I'm
when
saying.
we do the books, I'm like, dude, keep your receipts. I don't want them.
Yeah, okay.
Give me your bank and credit card statements. Give me the login. We'll
but
log
they used to do that. They used to do that in the old school way, right?
But
Where
how
they
do you
used to
write?
bring in
How do you write
receipts and
down?
stuff.
How do you write down who you're with and all that stuff on the bank statement?
So here's the deal: when you do that yourself, you can do it one of two ways. You can take that receipt. You, as the business owner, should keep that receipt somewhere. Just take it, throw it in a bucket somewhere.
Yeah.
I don't really care for the entire year.
Yeah.
But when you take that receipt, just write on it. Like today, I took one of my employees to lunch, and so I turned it over. I put who I went with and what we talked about, and then I'll just turn that in. So we have a record of it, and that's all. You just leave it. Okay?
Yeah.
Now the credit cards that I used is going to show up, and we're going to deduct it that way. But the receipt is there just in case. Or you can take it.
After a year, you can ditch it?
No. So technically, you're supposed to keep it 7 years. Now, they're not going to audit anything past 3 years unless there's fraud involved. If they find fraud, then they'll go back as far as they want
it's
to.
like murder.
Yeah,
there's no...
Your radar,
Exactly. There's no statute of limitation on murder, right? So like murder of your financials is what we got to look at. So just don't murder your financials.
Or ripping off the government, which is murder to them.
Exactly.
Right?
Give us, you made money, but give me some.
So if I was somebody out there, here's what I
Swear
can
to
say.
God.
If I was somebody out there and I was like starting a business, right?
Yeah.
And obviously I know I'm W-2 and Brett, but let's say you don't know how to file or why it should like. Where do you get started with that?
So, man, I love that stuff. I love talking to people. I seriously love educating people on how to do this, and I get this all the time. So we'll come in and we'll just go about it. And we'll say, hey, listen, here's what are you going to do? What are your plans?
Let's say if I'm like by myself, and then say, hey, you know what? This year I'm going to be by myself, but I do plan to expand, and maybe I'm going to have 5 to 10 employees in the next, I don't know, 5 years,
right?
Something like that. Okay. So, do you start them out like as a Schedule C, and then you turn it into that, or is it better just to start?
That's a great question, because we're going to probably start out. Depends on. I'm going to say, hey, listen, what do you have, and are you going to be producing some revenue right away, or how much revenue are you going to go through? Because if you're not going to make a whole lot, let's just stick it as sole proprietorship to start with.
I mean, you're not.
It's cheap. Yeah. You don't have to go. You don't have to form an LLC. You don't have to pay for a separate tax return of an S corp or a partnership. We just throw it on Schedule C and do it. There's an extra cost to doing that, but that's not much compared to having an LLC. But if you're like, hey, listen, I'm going to buy a business. I got this revenue coming in. And there's some liability that we need to be concerned about.
Sure.
Let's get an LLC to protect you and your family and your personal assets.
Right.
Even if you may not make a whole lot, for liability reasons, let's do it. Plus, in the future you're going to grow, so you're going to need it anyway. So it's not like a lost cost. You can still write it off. So let's form it and let's go that way. Then I'm going to tell them. I'm going to say, hey, listen, here's what we need to do. If you know how to do it with the Secretary of State, you can do it. You can pay me to do it, and that's fine. I'm going to do it. I'm going to do this. I'm going to do this. I'm going to get your EIN. I'll make sure you have the state business license. The licenses around here you have to do if you need to do it. You're going to have to do that yourself. But I'll get the EIN for you from the IRS. If we're going to do an S election, I'll do the S election for you, and here's the cost for it. It's not a whole lot, honestly, to start. And I think that's where people get tripped up. They're like, man, it costs so much to get started. I'm like, it doesn't cost that much, honestly, to get started. Yeah. If you have to have a business license anyways as a sole prop, that's $200 that you can spend.
Yeah,
I can form an LLC for with our costs and everything like $900.
This is your website right here, right?
Yeah,
BD CPAs.
Yes.
So if somebody wants to go here and find out where they can get you, they can come here.
Yeah, they can.
How do they find you as a?
If you're going to go in, if you go into the About Us there.
Okay.
Yeah. And then it should pop up. You just look.
There it goes.
Just look for the ugliest looking guy. That'll be.
So it's
me.
Meet Our Team, and you just kind of scroll down.
You talk about Chuck Norris on there.
I should throw a picture on there. I can show you a picture. I got one on my phone, man.
So this is the staff, huh? This is everybody.
So there we go. Yeah. So we got. So we got Dean, Brent, and so myself and Brent actually started this 10 years ago. Just him and me. And we've just built it ever since. Brought on some partners and just have everybody here. So we have a great team.
Yeah, so you guys really have a lot going on, it looks like there. You guys have a lot of people that are working underneath the umbrella there. Mm-hmm. How many employees do you guys have at that place?
So we have like 27 right now.
That's pretty good.
Good for you, man.
For a CPA office, that's pretty darn good.
Yeah, that is.
So I think we're like close to one of the larger just local firms in town.
Good for you.
And where's your landmark? Where are you guys located?
So we're on Horizon Ridge and Valley Verde, basically.
Okay.
So like up out my
by our office, Simply Vegas.
It might be on the other side of the freeway here.
Horizon. You said Horizon Ridge.
Horizon Ridge and Valley Verde. So
Yeah,
like the
that's
entrance
by us.
into McDonald Ranch right there.
Yeah.
So
We're right across the
look
street
out my
from
window.
McDonald Ranch.
I'm looking at McDonald Ranch.
Yeah, we're right across the street from McDonald
Okay.
Ranch.
Okay. Yeah. No. Yes, I know exactly where you are.
Yeah.
Yeah. You are. You're right there.
Simply
Simply Vegas.
Yeah.
I know exactly where you are.
That's us.
Yeah. We're like kitty corner.
You know,
Oh,
and
nice.
cool.
Nice. Yeah.
Well, like I said, one of the reasons we brought you on here is what we're trying to do, and Brett knows this too. We try to educate people, right, to make the right decision. And I don't know. I mean, I don't have this. We didn't have this information. A lot of people don't know this information, and I think a lot of people are looking for some type of direction, especially with everything that's going on. 70% of people that filed for a loan last year from my company, I think it was actually across the board for other companies too, did not qualify self-employed.
I think it's one of those things where as soon as someone takes the initial step to come in and see you, and I mean, I know you got a lot of clients, but comes in and to see a CPA and stuff like that, as soon as the initial consultation, I think almost everybody will walk out there being like, man, that was really easy. And why didn't I do that before? I mean, like literally, it was just make an appointment and coming in, and it was that easy.
And I'm happy if they want to go see somebody else too, and then come see me too.
Yeah.
But I'll tell you,
Put them on the right course.
I will put them on the right course.
Yeah.
And I say a lot of times, I'm a highly paid babysitter. Like,
well, compare
you know
like this.
I say that about my business. I manage egos for a living,
right.
bro. What about you?
I think too, like this. So you got people out there that a lot of people are W-2 and a lot of people are self-employed. And the reason, like I said, we're talking about is because a lot of people are self-employed are not getting approved. But you got a lot of people that are W-2. You got a lot of people that are still working jobs, right? That they work for a company. Does it really make sense to go? And I'm not saying, but does it make sense to talk to a CPA?
Right. You know, again, the answer is depends. Depends on what they got going on as far as the
outside of that.
Yeah, the itemized deductions, really, because that standard deduction went up so high that a lot of people don't have to do it anymore. And that was kind of the idea. They jumped it up way high so people don't have to do it because there's a lot of fraud in that aspect of it.
Gotcha.
But there are some things, if you have kids that are maybe in that are like kindergarten or below and they have preschool, okay, they may not know about that credit that's sitting there. They may not know that if you have a kid in college and how to work that, because you got kids going to college and there's tuition. Depends on what the parents make. It might be more beneficial to have that kid on the parents' return compared to the kid actually filing their own return to be able to get the American Opportunity
You don't know
credit.
you're costing yourself money if you don't know,
don't
right?
know
And that's the
unless you
thing is
go.
like so you can show them all the
and here's what I say
possible
is,
ways.
Get me on the phone. Even if you don't want to come down, at least get me on the phone here, and I'll talk to you for
Zoom.
like 10, 15 minutes. And we can just go, hey, listen, tell me your
That's
situation.
a good question.
Yeah.
Yeah.
I'll be
How
like,
many people come in to see you right now? I got a lot of people that still come in to see me. It's like mixed 50-50. It's down a lot
because
for
they're talking financials.
we're
well,
technically
I mean, that's some
closed.
people are.
Well, let me say this:
No,
you're
no.
technically closed.
So we don't have to wear the
masks and stuff, right?
Yeah,
Yeah.
the masks.
Now,
So.
but do you still have people that want to come see you?
Yeah, we
like
do.
is
Yeah,
it like
absolutely.
the old school type of people, like
Yeah.
And I get a lot of people that Zoom,
Yeah.
right? Especially the newer the newer generations people, but. I don't know. To me, it's different. It's a different
It
world.
is different. I actually really like the in-person stuff.
I do too.
I just feel like that's who I am. I communicate better that way. They get to see my face. They get to know my expressions.
That's the thing, right? And so when they meet you face to face, you're a real person. You have a family. You can
And that's
know what
the
you're
difference.
doing. All
They
those
see my
things.
pictures on the wall.
Dude, I'm
They see
telling
what's
you, it
going
just
on.
makes
They
it
see the
easier from that
office.
point on.
They feel good.
The difference
Trust,
too is look,
Trust,
if you're a
yeah.
real estate agent, you do get that still, right? Because you're
All
not
the time, yeah.
you're not riding in the car with them, but you might meet them at the builder site. You might meet them at the house. You kind of like, hey, even if it's the
At
whole,
some point or another, we're meeting before you buy a
right,
house.
you're going to get
Yeah.
an introduction meeting in person.
Yeah.
About 30% of people that I close loans with, I never even meet them in person. I used to go to the
You don't
title
even
signings.
see what they look like. They're
Yeah.
just
No.
emails and phone
Right.
calls.
I used
Isn't
to
that
go-
crazy?
I
Think about
know.
that. We make a living.
I know.
And if you think about the...
And we don't even see the people.
But
Yeah,
how much of the world has changed that though too?
Yeah.
Yeah. I mean,
know what I mean?
the
Think
complete
about it.
world's changed, and
Right.
it's not going back.
So and a lot of these corporations are staying that way. They're just saying, hey,
Yeah.
we're all going to keep you from. So it's not like it's going to change dramatically about what we do as far as our professions. But I do think that it does change the fact that it takes that personal feeling
It
away.
does, man.
I
gotta tell you, like I can't tell you how many clients I've had come in that were referred over by whoever, and they're scared to come in because they're like, oh man, how much is this going to cost?
Yeah.
They're
Yeah.
worried.
Yeah.
Come in. I'm not going to charge you to just sit here and chat. And then we realize, we get along really well. We're friends.
Yeah.
And my clients wind up being friends of mine.
Yeah.
Because I take an interest in their life. because I care. I actually truly do care about it.
Yeah.
You know, and unless you voted for certain people, and then there's a surcharge. I'm just kidding. No, I'm just kidding.
10% a-hole tax.
I actually am going to put that on there.
Yeah. Well, did you make it? I'm like, I didn't charge him 10% for a-hole tax on that one. Come on, you know what I'm saying. Sometimes. I need to charge a little extra this time. Yeah.
I do think, though, that it does play a big part in keeping and sustaining business. And I don't know. I mean, like you get to talk to these people. For me, sometimes I don't talk to them. You know, there's no like connection where there's loyalty. Obviously, you do a good job, but they don't know you on a personal level.
I mean, you're talking numbers, though, and financial things. On my end, I'm the guy that's showing them the shiny ball that all the bells and whistles that they like, and they're going to see their family there, and it's a visual thing. I'm not the one talking numbers. I'm not the one talking price. Those are dirty words, you know, like that's reserved for the lender and for the CPA. Yeah. So they're always, a switch of mentality in their mind of when they're out with me and dealing with me, and then when they're dealing with numbers and money, by the nature of money.
How often do you deal with somebody that's a 1031 exchange?
I would say there's
I want right now.
There's not a ton of them out there.
Can you explain what that is?
Yeah, absolutely. Yeah, 1031 exchanges can be really good when utilized properly. And they've changed the rules. I think we all kind of know that they changed the rules. It used to do just personal property. Now it's actually real property. It has to be real estate that you're going to have to exchange.
Are they doing away with that?
So there's a talk of it, Biden actually he wants to try and get rid of it because if you get rid of the 1031 exchange, now you're going to have to pick that up all as income right now, and you're going to have to pay tax on it. And they're thinking it's like this. It's like they're very short term in their thinking by doing like, hey, it's a money grab right now. Yeah. But what's going to happen is people are going to be like, you know what, not going to sell then. I'm not going to take it. I'm not going to go reinvest over here. The idea was, and it literally started 100 years ago. In 1921 is when
it keeps the money flowing in a sense because it gives people reasons to.
Yeah, because you're like, hey, listen, I'm going to jump into this next one. I'm going to do another project. I'm going to jump into.
You make it a smooth transition from one to the next. I gotcha.
Yeah,
because I was talking about you. I was talking about you the other day. I was like, well, what's whether you pay the taxes right now or you pay it later, what the hell's the difference? You still got to pay the taxes.
Well, here's the deal.
I was like, what's the big deal? I didn't understand the big deal, but you explained it pretty well.
Yeah.
And where it makes sense.
And there's a time period. So if you're out there and you're an investor, see, we just went through a deal. I just went one with somebody on the team. There's person was buying an investment property. It's a 1031 exchange. They only have so much time to take that money and put it back into a property. Right, or they pay taxes on it. Now, I think it's like
180 days.
Yeah, 180 days, and then if you're
that's half a year though, dude.
Yeah, I mean you kind of have to identify a property though pretty soon.
Yeah.
So you're going to have to, if you're going to do this, you have to identify.
Well, yeah, I mean they're always
you can't touch that money.
This is about ready to close is when they're talking to me.
Yeah,
on their other one.
Yeah.
And then so they get taxed on the money that they don't use if they don't use it all. Is that right?
That would be correct.
Is that correct?
Any money that they pull out themselves. That they will
that
get
doesn't
taxed
go back into the house.
Yeah, exactly.
So that's taxed as like income.
Yeah, exactly. Okay. And they have to set it up right. They have to go through somebody who is going to keep that money, like a lender who's going to hang on to that money for them, so they don't have access to it. Because if they have access to it, you're done, right? So
you know what humans do. We can't help ourselves.
So if you're out there and you buy a home, let's say you buy a home, right? You stayed in the house 10 years.
Yeah.
And you sell the house. Let's say the house was, and when you bought it, $200,000. For whatever reason, it's valued at $600,000. Anything over $250,000 as a single person, you get taxed on, right?
Yeah.
And anything over $500,000 as a married couple, you don't get taxed on. But you do get taxed on. Yeah. So that's something that I didn't know the other day about it, and I was looking at this.
If you own a house,
if you own a house
over $500,000.
No. If you own a house and it accumulates where you get a return over $250,000 or over $500,000 in returns, like for California,
well,
right?
you'd have to sell it, right?
Yeah. So look, let's say I bought a house in California for $500,000.
Gotcha.
And I sold it for $1.2 million. Okay. I would have to pay taxes. Is it on the
$200,000
of $200,000?
Yeah.
So you have to pay taxes on your own house that you've accumulated if it's over a certain amount, and that's on a married couple.
Even if it's your personal house?
Even if it's your personal house.
Yeah. That happens a lot in California. Because
It
you think
does.
about that. They've owned, some of them owned it for 30 years. They bought
they bought it for like $200,000.
Exactly.
It's worth 1.4 now.
Exactly.
Dang.
Yeah.
Dang.
And that's just a mobile home.
Dude, that's why they all want to come here.
Seriously, that's why,
can't
man.
blame them.
They're selling, they're coming, they're paying cash or putting a big down payment down and getting a low interest rate.
So Rick, I'm going to put you. I'm going to put you on the spot here.
Oh, great. Here we go.
So,
what does this have to do with Chuck Norris?
Absolutely everything.
I want to talk to you about something really quick.
I'll create a meme for it.
This is just my own personal thought and my own, I'm just thinking about this. So, you know how people get audited, right? Okay, so I think CPAs hate that word audit because they don't want to be involved with it. Is there a lot of people that you've known, I'm not going to say you, but people in general that have done things where it kind of makes the IRS kind of raise their eyebrow a little bit?
Absolutely.
Dude, I'm sure all the time in his business.
Yes.
So people, how many times? When are people not pushing the envelope in his business? You know.
I remember the time when it was like where I was doing loans, right? And I would be sitting in the office, and then it was like during the subprime days, and they would come down the hall, and you'd just be sitting there like doing your work, and all of a sudden you'd see somebody in handcuffs walking out. Dude. And I'm sitting there going like, wow, I guess that new car, always, suited and booted. The guy was,
what's that? Straw buyers?
Right. But I'm sure, I'm not saying it's on that level, but I'm sure that there's some things where
in this town
you've seen it where people are like, hey, you know what? Maybe that person went a little too far, trying to save too much. And I think there's a fine line, I think, right, where you get a client, you want to make sure they're taken care of, you want to save them money. They try to beat you up though, right? They're like, hey, this isn't enough.
No, I know
it's never enough
all the time.
I'm sure that's
all the time.
Probably an ongoing battle you always have.
It is, as a matter of fact. The guy that I talked to on the phone today, as a matter of fact, he's that guy, right? Yeah. And so I just have to say, hey, listen, here's the deal,
dude.
Yeah, here's the deal. I can't do this. Yeah. I'm not gonna do it.
That's equivalent to someone being like, yeah, I saw the video for Mesa Ridge, Toll Brothers, which is 1.1. Yeah, I'd like that, but I'm around 500,000.
But I'm going to use every legal possibility we can do, and say, hey, listen, this is how you justify it. If you want to justify it, you have to do this, 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 and this. There might be some paperwork involved, if you want to justify it. That's what you got to do. But
there's always those people
they
always want to push the edge.
Absolutely.
Right? They're like,
dude, I'm sure that's probably a lot of your clients.
No, honestly, no. For the most part, it's like you kind of train your clients.
Yeah, you're right about that.
And you just don't. We're not going to put our firm at risk.
I also think I also think it's the type of client.
License.
It goes by a type of person where, let's say you don't really know the difference. You're not. Some people that have money, assets, they're dangerous. Why are they dangerous? Because they've been down the road. They've been probably talked to a few CPAs. They've used the knowledge and utilized every avenue that they can. Or if it's somebody like, just coming in that's maybe making $100,000, they want to save some money, they probably don't know the difference. They're just like, hey, I'm just going to take your word.
They're not sophisticated financially.
I'm going to take your word.
What you can do with a lot of money.
And the more sophisticated they are, the more they want to push the envelope.
Oh, I bet. Because that attitude of I'm smarter than them.
Yeah.
Right? How many times do you deal with that?
This is Vegas.
Yeah.
That's what they,
Oh, I bet, man.
Is it a little ego too, where it's like
it's like that Volkswagen commercial?
It is, right?
It is. It's like almost like a money power ego.
I'm more successful than you. In some cases, they think that. You're going to do what I need you to do for me because I'm going to pay you. But sometimes
that's great. I'm not that CPA. Enjoy your day.
Exactly.
That's how that goes. You walk them out to the door.
You have to say
absolutely.
No. You have to learn how to say no.
Listen, you've done this long enough and paid your dues enough and know what you're doing enough.
It's not worth my livelihood. You're going to pay me X amount. You're going to pay me this much. I don't care. You pay me $20,000 to do this. It's not worth my revenue for the rest of my life.
I'm not going homeless tomormow.
So but I mean, like I said, though, we'll still try to do everything within our legal ability to do it, using all the laws and the loopholes or whatever you want to call it. Absolutely, but still, it's not worth it. But
so I want to touch one thing. I know we're going to finish this show up.
Yeah.
But Rick, I want to talk to you about just one thing. By the way, Rick Douglas, he's a CPA. What's the name of your company?
It's BD and Associates.
BD and Associates. Okay, so I want you to kind of get that out there. So investment properties. Okay, you have a lot of people that want to do investment properties. One of the things we do is we do another show. I do, I'm part of one, financing real estate, and they're talking about a lot of investment properties. So can you kind of take me through, if somebody's out there that wants to buy an investment property or properties, right? How do they look to file their tax returns if they own an investment property?
Yeah, that's a good question.
How does that happen? Like, okay, I got a primary residence, and now I want to go buy another house, and I want to rent that one out.
Dan's just asking you questions that he wished his clients would ask CPAs before they came and met him.
Well, no, it's a I'm asking questions that are put in place.
No, that's what I'm saying. I know
that I go through.
That's what I'm saying
all the time,
all day,
all
the
time.
That's why I'm saying you're saying that.
All day. So if you're buying an investment property, you don't got to be a 10 property owner. Let's say you just want one or two. Let's just say you want to get some type of stream of income, and that's a good analogy, Brett. I would have to say, man, you're right. I deal with this stuff a lot. Dude.
Yeah.
So kind of give them an understanding, like what is the process? How does that go? As far as I own a property, I bought one. Let's say it's the year now after. They come to you and they're like, okay, how do I file my returns?
Yeah,
on a property.
So they purchase the property. They have everything. So what they're gonna, ultimately what we need is the HUD statement. Because we're gonna have to book that in there and figure out what they bought it for depreciation reasons. So everything, you have two options. You can, you could open an LLC, and actually file, and you can put it in S corp. But I would not recommend doing that. You can do an LLC just for protection reasons. Not a bad idea. But if you have an LLC, that's still considered what they say as a single member LLC, disregarded for tax purposes, meaning it doesn't really matter for tax reasons. It's like you put it on Schedule C, which is where all rental properties go.
Right.
And so the LLC is just for liability protection if you want to. And it just goes on Schedule E of your personal tax return. That's all. Just something simple, and then I
think too. There's a lot of interest write-offs. There's a lot of stuff that you can do. Like, when people buy a home, is that still intact? Like, where you can write the interest off? What other things can they write off? Like, if it's their first home.
So if first home on their as their personal residence.
A lot of people say, "Well, I'm renting, right?" Let's say I'm renting, and I'm like, "Well, my payment's $1,500, and I'm going to take a payment at $1,600, but there might be incentives, right?" Okay, what is the incentives of buying a house? Where's the perks that? Especially a first-year owner of a home, where does that come in?
So the first year, if you're buying it for the first year, sometimes there's points that you can deduct, right? If you do that, because that's
the discount. Like if you pay down the rate,
you got it. Yeah. So that's all it is. The interest. That's really what you're paying.
Right. So basically, if you come to me and you get a loan, and I give you a buy down on the rate, you're saying that buy down cost you can get. You can get some write-off on that.
Absolutely. Yep.
What else can that?
And so then obviously the interest that you're going to pay on that loan.
Okay.
And so it depends on when you buy that in the year, because you may not reach the amount to be able to itemize if you don't buy it early enough in the year. If it's your first home, if you haven't just sold another home, so you got to be careful there, because the standard deduction changed. It went up so much. So if you're a single person, you're at $12,800 for the year now. 12,006. I don't know. It went out. I can't remember now. It was 12,400. I think it's 12,600 now, or 12,550 or something like that.
Yeah.
So if you have that much in interest, you're going to be able to deduct it. But you can deduct the interest, the points, the real estate taxes on there, and MIP. Mortgage insurance premium. Yeah. If you make under a certain amount. Once you make over a certain amount, which is roughly say $150,000, and don't quote me on that because there's an amount. Then you can't deduct that.
I got you.
So, but yeah, that's what you
so there is perks, right? Yeah. And there's certain things, and obviously getting a CPA, if you go and get a house and then they're saying, well, just go and do it. Let's say you do it with the software or whatever. What is that? H&R Block, stuff like that? Like, is that what it is?
Yeah, TurboTax.
Yeah, like when they go do that stuff, right? Do they get the same options?
Yeah, it's more of a questionnaire when you go through the TurboTax. It's like, hey, do you have this? Yes, put this in here. But it's not gonna prompt you to some of those things they may forget.
Let me ask you guys this: who came up with all the tax laws? Congress? Senate? Our government?
Yeah, it would have been.
You're telling me our government's smart enough to come up with it? Because it sounds like
that's a good question.
You know what I mean? Like, what and how you can maneuver things to people's best benefits, you really got to know what you're doing.
Yeah.
It's just crazy to me that senators and politicians were smart enough to come up with it. They weren't. It just got out of hand, I think.
It does get out of hand. and they don't necessarily know all the stuff.
Yeah, that's the point I'm trying to make.
It's like, what do we have to produce as revenue for a country?
I mean, from a layman's point of view, you telling me this stuff, like, I follow along, but it's like, this is crazy how in depth you need to know this and that. And I mean, which brings more to the benefit of why you should see a CPA.
There's a lot of little things, honestly. If you're just the normal person who is actually just trying to itemize and seeing if you're going to reach that limit, depending upon being single or married. But there's things that I'm going to ask that they may not know that they could deduct.
Exactly.
But there's not as many as there used to be, but there still are some
things.
They
don't know what they don't know.
Yeah.
That's the problem.
Vehicle registration tax. They didn't know they could do that.
Explain that. What is that?
So, here, really one of our sources of revenue as a state is kind of like our income tax.
Yeah.
It's going to be the vehicle registration tax you pay. As we all know, here in Nevada, it's ridiculous.
I remember here from Wisconsin.
Like, everybody's like, "Hey, man, I'm going to go register in Utah, or I'm going to go register in."
Oh, they have ways around that.
So do you guys know
first,
why?
Son.
Do you know why it's higher here? Is there a certain reason why it's higher here?
Because they got to get you in one way or another. And this is our way.
It's just a revenue. They've got to figure out how much we need for our budget for the state and where we're going to go. We don't want to do an income tax because we want people to come here. Oh, we don't have income tax.
Right.
But if you look at Nevada, as far as like how high a taxing state we are, we're right in the middle.
Yeah.
I mean, you've got some states that have an income tax are actually lower down the line there, and so they get you in certain ways. They're going to get you in your. Real estate tax here is actually pretty cheap.
That's what I'm saying. So in Wisconsin, it cost me like $450, $500 to register my car here. Mm-hmm. In Wisconsin, it would have cost me $50.
Yeah.
But in Wisconsin, on a $150,000 property, you're paying $3,000 in property tax.
Mm-hmm. Yeah, so
here you'd be paying $1,500.
It's all how they shift where they're going to take their tax from. So here it's the vehicle registration tax.
Exactly.
We actually get a good source from gaming, but until we get shut down by somebody to be unnamed, and then we don't have any revenue.
Sissy-lack?
So
I call him Sissy-lack. And my wife goes, "Is that what people call him?" I go, "No, I do." Anyway, that's another conversation.
So yeah, exactly, right. So and another way actually is through forming LLCs. We actually have a pretty expensive LLCs to form here. Like you think about that when we're forming an LLC, just the state cost is $425.
Yeah,
and you can go form it for like $50, $75.
But this is a very business-friendly state for taxes.
It is for tax reasons. So they're like, "Hey, we're going to get it this way.
It's worth it." Yeah,
you know.
If you have, I'm grasping all this and digesting it. So you're out there and we're going to go through the process of go get a CPA or talk to a CPA. Mm-hmm. The potential is you might have many more avenues to save money potentially.
Hopefully,
obviously, everybody as a CPA that goes and sees a CPA, that's what they're doing. They're going there to save money. I mean, everybody's got to file their returns.
If it didn't work, they wouldn't have a job.
Right. Yeah.
It's real simple.
And that's what I'm saying. They're looking for ways to save money. Now, you can't go obviously too far, but it probably makes more sense to at least see about a CPA, even if you don't make a ton of money, because you maybe if you bought a home or you have something going on, just like you said, with not knowing about the registration. Yeah. These
General
types of things,
tax,
they might save you more money. And I think everybody right now can save, use a little bit more money with what's going on with COVID, right? I mean, so I don't know. I mean, is there a consultation fee? I mean, what is that?
No, I don't charge to talk to people at all.
Does most CPAs do? Or no?
I would say you're probably going to get a gamut of people that will, because they're just like, hey, this is our time, is all I have. And I'm like, well, the consultation thing is that's my giveaway, right? Okay. That's my, hey, I want you to be here because you want to be here, and I need to make sure we fit. Okay, so this is.
I get that.
It's like Mr.
I totally get that.
I get that question all the time.
Like, believe me, man, I'm interviewing you as much as you're interviewing me.
Yeah, right. Well, seriously, seriously, I am too.
100%.
Yeah. So there's some people. It's just like, I am sorry that this may not be a good fit.
Do you like just realtors? I know lawyers used to charge. We don't. I always get the question.
Realtors can't. Well, we could, but you can't go down the street and go. I mean, so that's the one thing about attorneys that I give them credit for. Collectively, they all stick with that, which is they all charge.
But do they have an entity like the GLDAR?
But if you had attorneys that weren't willing to do that, then you would open a whole floodgates. But not one ever does that. They all stay together. They all stay together as a union like that. They do.
Well, I get that all the time. What I get all the time is the fact that, do you charge a consultation fee? And it's like, no, we don't. I mean, a lot of people wouldn't be in business. Plus, it's a very competitive market. So if you do that, everybody has to follow suit, or if that doesn't happen, it just doesn't happen.
That's why you just go to school for 2 weeks, become a realtor, and you got to go to school for 3 years. I mean,
I'll tell you what, though.
Just be honest.
I love capitalism because you get to run your business however you want to.
Absolutely, 100%.
And you know what? I just choose not to charge for a consultation. Yeah. And quite honestly, I'm happy to educate.
You've done this long enough where you've got a nice system figured out how you want to do it and the reasons for it. So
I want clients to be here because they want to be here. Yeah. And I'll give my time. That's fine. That's my give back. I'll give my time. I'll educate you. And if you're like, hey, listen, this is too much for you to do, fine. That's okay. Yeah. Go do it yourself. Yeah. Or if you find somebody else that can do it cheaper and do the same things, great. Go for it. It is what it is.
Well, we'll wrap this up. Yeah. So, Rick, how can somebody get a hold of you? I mean, let's give some insight about, because I think a lot of people may have interest in CPA. I'll put your contact information. So how do they get a hold of you?
You know what? Usually it's just, I'm free. I have my cell phone out there. People are welcome to call me there. They call the office. They can email me, so
yeah.
You're welcome to put my information out there. I'm happy to take calls from people. Obviously, it's really nice to go through the office if you can.
Yeah.
Schedule an appointment. But,
professionalism wouldn't kill anyone.
Or when I'm running on the roadways at about 9 o'clock at night over on Paradise Hill, that's where I'll be. So just catch me there. I'm usually in Orange. So it's good. I'll just honk a couple of times. We're good to go, right?
All right, man. Well, I appreciate you coming in, and would you be open to come back, maybe?
I'd love to, man. Yeah,
right, it's been a pleasure, Rick.
I appreciate it. Thank you very
so
much.
much, you guys.
Thanks for your time.
Appreciate it. Thanks.
Thank you for watching an episode of the French Workbench podcast. If you want to tune into past episodes, please subscribe to my channel now. Also, if you want to look at our audio-only options, we do have iTunes and SoundCloud.